Hello, and welcome to another update video about Bitcoin. Not too much happened. I mean, we did come down earlier today, as already discussed in the previous video. We're just below 26,700 again. And one more low might happen here in this D wave. So we're going to zoom in into the micro level in a second, so we can discuss the actual movements that are playing out here. Don't forget, we could get the WXY structure in place here, where we get a higher wave 4, which would result in a break above 27,700, but it should then react or stay below 28,320. If we also go above that level, we have to deal with a different corrective structure. Short term, certainly more bullish, but probably not yet a breakout scenario, but we're going to cross that bridge when we come to it. At the moment, we are still staying in this sideways correction, which is super boring. Today we have the FOMC meeting minute release. Again, I think the market is sort of waiting for it. We had a little bit of volatility ahead of it, but I'm not sure how much of volatility it really generates because, well, in the last few months when they came out, they didn't do anything, right? It was a bit of a non-event. Sometimes they do. I mean, you never know what's really in them, right? So let's just take a look at when they actually come out. We have Wednesday today, obviously, so you can see here meeting minutes 2 p.m. That is Eastern time. So I'm in the UK, so that would be in the evening here. But yeah, that's when they will be released. And obviously tomorrow unemployment data, to talk about that GDP, and on Friday the inflation data. Now at the moment, expectation is that we are in the triangle. It could be the WXY structure, which creates a higher wave 4. But that's only the alternative. Let me actually hide that because we don't need it right at this moment. The idea is that it is a triangle. As long as we stay below 27,700, already a move above 27,500 would make the triangle count, the actual triangle count, less likely, because price would then move above the C wave high, and an E wave should always stay below the C wave. Okay, at least in a contracting triangle. So the idea was, what could it be? Obviously, in a correction, in a triangle, you have 5 waves, A, B, C, D, E, until we get either invalidation or until we break the triangle into the expected direction, which would be down. We can always extend sideways, but it obviously needs to stay within certain parameters. The breakout point on this chart is 26,360. So if we go below that level, we have a break below the B wave low, and that would indicate break of the triangle into the anticipated direction. If we get a small wave up here, that could be an E wave and should stay below 27,500, and then we could head down. That's at the moment the expectation. Ideally get one more lower high and then come down. But either way, the expectation is either way to go down once more, especially as long as we stay below the invalidation point, 27,700. If we go above that level, as explained before, we probably deal with this WXY structure, which can go a little bit higher. It's just that the pivot points allow us to understand when a certain scenario gets invalidated. Now, what I wanted to do a bit of a deep dive here into the leg that we have here, that wave down, the D wave of the triangle. As you can see, another E wave would be needed to complete the triangle. And first of all, let's establish, has the D wave actually reached target? What is typically target of a D wave? It is typically, and it's more like, it's not a super reliable level, but more like a guideline. It's typically the 61.8 extension of the B wave. And yeah, that was reached. It was actually broken a little bit, which could actually indicate that something maybe directly bearish is going on, yeah, without the E wave. We'll see. So we have this structure here that I wanted to look into. And, in a triangle here, we would expect the D wave to be an ABC structure, or maybe WXY, but certainly a corrective structure. Now we can certainly see 3 waves down, right? I mean, it's not a 5-wave move, so it's a 3-wave move. Does it mean it's complete? It could be, but I think we get one more tiny low, at least would be great to get it, and it would be very clean. The idea is obviously to look for the AB, which is here, and then this could be a C wave off wave D. And within the C wave, obviously we're looking for a 5-wave move in itself, which is obviously, which could be, let me see, well, that could actually, Actually, this wave 2 could sit here. Sorry, the B wave. And then we look at this as another 1, 2. Yeah, this could certainly be 1, 2, 3, 4, 5 to the low in 3 waves. Yeah. Then this could have been the 4, or maybe the 4 is still ongoing as a tiny triangle. And then one more wave down. This would be ideal. So as long as it stays above 26,360, we can get another lower high in an E wave. Now, this gives us a clue if something directly more bearish is going on, because if we get 5 waves down instead of A, B, C, 3 waves, then this is probably not a triangle. So if it does something like that, 1, 2, 3 instead of the wave C, then another 4 and another 5, then we have a 5 wave move down, but also then we would expect a lower high as a pullback after 5 waves down. Yeah, then we would expect an ABC to the upside, similar to the E wave, just maybe from a little bit lower, and then come down. Yeah, so let's see if that is going to work out. At least that's my idea. I mean, you know that the lower degree wave counts, they are often less reliable, and that's really just to keep everybody entertained in a boring market. So hopefully that helps. And I mean, if you then dive into the detail, I mean, let's go to the 15-minute, 5-minute chart. You can actually see fairly clearly that why I did count that move as a third wave, because first of all, it's the longest one, and you can say this was a 1 in 5 waves itself. This is a 2, this is a 3, this is a 4, and this is a 5. So let's put that maybe in a different color and different wave degree. And then we've got that thingy counted. Often doesn't make sense to count everything in the micro like that, but first of all, not much is going on, and I think we've reached a critical support level down here, obviously dancing on that yellow fib level there. So it's going to be interesting. I'll keep you updated, obviously, about that development. Before finishing, just make sure that you follow us on Twitter as well, Instagram. Yeah, we are ramping up our social media a little bit. So on Twitter, you find additional content, signals, posts about mindset, trading, Elliott Wave, strategy. You can learn some stuff. A lot of free content there. Not any advertising, not really. It's just mainly really content, added value that hopefully helps you. So on Instagram as well, just make sure that you only follow the official accounts and you don't mess around with any fake accounts, because there are a few out there. Besides that, hope you liked the update. If you did, then please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.